Okay, folks, welcome back. This is our final discussion this month, June 2017 content regarding commodities and futures. But I have to remind you one more time to take a look at the disclaimer here. It's very important. And as a reminder, I'm not a CTA, I'm not a licensed commodity trade advisor. Everything that we discuss here should be viewed in the light of a paper trade only. All right, June 2017 ICT Mentorship, ICT Index Trading Concepts, Lesson 5, Index Trade Setups. Okay, so I gave you the range projections and objectives lesson in lesson 4, and I'm going to amplify those for trade setups for indices. And as you're going to see here, it's rather simplistic, which is exactly what you should be looking for setups. If you overcomplicate it, obviously you're going to have a million questions and never come to the end results of understanding. So the first one we're going to look at is 2-session up close. And when we look for the AM trend to return down to a discount array, what we're actually looking for is we're looking for an index SMT divergence on the lows. And we're going to be comparing the lows from the London session into the 9:30 a.m. The AM session is usually going to reach up into a expansion move. It can be a higher time frame PDA, but generally you want to be holding out for time of day, which is 10:30 to 11 o'clock in the morning, typically as we understand it in Forex as the London close. But we want to be holding on to it with the idea that it's going to expand going into the lunch hour. Now, when we get into the lunch hour, it can go in consolidation. And again, we can be looking for a retracement back down below the lows formed in lunch, or we could be returning back to a fair value gap or bullish order block seen inside of the lunch hour. At the lows that's formed in the lunch hour and the low that forms immediately after 1 o'clock New York time, those lows are going to be compared against the two other averages. So when we look at the S&P, we're looking at the Dow and the NASDAQ, and we're going to be comparing lows at these specific price points. There's no ambiguity here. It's highly specific. We're going to be looking for the indice to diverge. One of them doesn't have to be the E-mini S&P. If the NASDAQ fails to go lower, that in itself supports the idea that the S&P should rally and go higher. And again, as we go into the later portions of the day, going into the close, we're going to be relying on time of day as well as we did with the AM session. Now, when I mean relying on time of day, we have to do what we can to hold for time. Remember, the day is going to expand as we get closer to the closing price or closing hour. We want to get the maximum amount of daily range in our favor. So if we're long or trying to get long in AM or the PM session, it's most beneficial when we're holding for the maximum potential range that can fulfill in a daily candle. So if we're looking at the E-mini S&P and we see bullishness underway and we're long, and it's only 2 o'clock in the afternoon, we've seen some handles in our favor, or in other words, paper profit. Don't be aggressive about trying to take those profits off the table, because you want to allow the time of day to come to a higher level of delivery on price, which obviously will lend well to you getting a higher profit. The more you hold towards the close, the more opportunity there is for you to make more of a range. The AM session and the PM session highs initially are going to be most likely a 15-minute or a 60-minute PD array. Now, since we're looking at a 2-session up close, both the AM session and PM session PD array is going to be a premium array. Now, again, it could be a 15-minute premium array or a 60-minute premium array, but you're aiming for that for both sessions. Now, if you notice how I have the diagram on the PM session, going into the close, it could be 2 stages. It could fall short of a 15 or 60-minute PD array and start to retrace. look for an additional ramp up that last hour going into the close until it reaches the 15 or 60 minute PD array or premium array. Okay, we're looking at the 2-session down close. Again, in the morning, when we see price return to a premium array, at that moment, we're going to be comparing the other two indices, the NASDAQ and the Dow, and we're going to be comparing the highs for index SMT, again from London into the 9:30 opening equities, and we're going to be holding till 10:30 to 11 o'clock in the morning, relying on time of day to get the maximum amount of range. As we get closer to 11 o'clock, there's more likelihood of a consolidation or pause going into the lunch hour at noon. And during the lunch, we're going to be looking at the highs comparable with the NASDAQ and the Dow futures against the S&P. And again, this can be a return back to a fair value gap or a bearish order block or closing of liquidity void and then go lower. Or you could run the lunch high for buy stops and then reject. But you're looking at the highs during the lunch hour and you're looking at the high that forms post New York lunch. When that happens and it forms, there's always going to be some measure of a short-term high that forms immediately after lunch. And if you're looking for a 2-session down close profile to unfold, projecting that daily range, we're going to be looking for weakness immediately after the lunch hour closes. So from 1 o'clock in the afternoon, New York time, we're immediately going to be hunting and stalking the E-mini S&P's short-term high. So if the price was rallying up, we're going to be looking for reasons to suspect a fair value play for return to fair value for selling short at a bearish order block, fair value gap, or liquidity void, or a run above or a move above the New York lunch. In the PM session, again, we have to rely on time of day. Don't just take a couple handles of profit. Hold on to it. Head towards the close. At least try to hold on to it until 3 p.m. bond close. And if you can do all that you can to hold on to it into 4 o'clock, it's ideal to do that. The AM session and the PM session intraday lows, again, are going to be many times lined up with a 15 to 60 minute PD array. And since we're looking at a 2-session down close projected range, it's going to be a 15 to 60 minute discount array. Now in the PM session, again, that many times can happen as a 2-stage short-term rally where early profit will be taken. If it does not do that short-term bounce at a logical 15 or 60 minute discount array, hold for it to break another leg lower going into the close, and then that later point at which it trades lower many times will trade into that 15 or 60 minute discount array. All right, we're looking at the AM rally, PM reversal, projected range. In the AM session, we're going to be looking at the 3 averages, NASDAQ, Dow against the S&P, and we're going to be comparing the index SMT on the lows. So we're going to be looking for a divergence. One of them will fail to go lower. That will signal the time to be a buyer of the E-mini S&P for the New York session. And we're going to be relying on time of day, holding until we get to very close to 11 o'clock or just past 11 o'clock as we get into the lunch hour. And again, ahead of noon, many times we'll see a little bit of a profit-taking retracement. And then in the afternoon, we're going to be looking for a rally to sell into. And we're going to hold that until we get to time of day and price. So we have to refer back to that discount array in the AM session that caused the initial rally. And if it blends well with a higher time frame discount array, obviously we expect a short-term bounce, maybe back into consolidation or resuming higher to take out the daily high. But if the daily AM session discount array is not a higher time frame discount array, we'll look for continuation on the downside and take out the intraday low. In the afternoon, that high is going to be a 15 to 60 minute premium PD array. In the AM session, in this case, it creates a lower high than that which is formed in the PM session. If that short-term high forms before lunch, if it's below a 15-minute or a 60-minute premium array, then we're going to be anticipating, before it even happens, the initial move outside of the London lunch around 1 o'clock in the afternoon New York time. Then it will rally up to the 15 or 60-minute premium array, and then anticipate a higher time frame market reversal to fall as indicated in this diagram. Now, I know what you're thinking. 15 is not a higher time frame, and neither is a 60-minute. But we're going to be looking for a overlap or a nested premium array that's seen on the 15 or 60-minute and daily or 4-hour. So the higher time frame confluence with nested ideas of premium array would be our catalyst for this PM session reversal. AM decline, PM reversal. In the morning, we're going to be looking for the index S&T divergence on the highs, going from London session into the 9:30 a.m. equities opening. One of them bearish. Then one of those three indices will be bearish divergence, indicating a New York AM session decline. We're going to be holding again for very minimum 10:30 a.m. and closer to 11 o'clock. At 11 o'clock, anticipate some measure of consolidation or retracement going into the lunch hour. In the PM session, we anticipate a run on the daily low or the low seen in the lunch hour. Now, again, we hold on to the later portion of the day. At least try to aim for holding till 3 o'clock bond close, New York time, if at all possible. If it gets to the premium array that saw price decline from the AM session, we could see price resume and go lower. Or if that AM session premium array is not a higher time frame premium array, we can anticipate further upside and then the intraday high being taken out. In this diagram, the AM session low is suggesting the low forms above a 15 or 60 minute PD array, and therefore a lower low could be expected in the afternoon, trading down into the 15-minute or 60-minute PD array. And that would cause our, again, reason to justify a nested discount array. So if that discount array in the afternoon forms at a 15 or 60-minute discount array, and it is also a nested higher time frame 4-hour or daily discount array, that further bolsters the idea that this is going to be a market reversal in the afternoon, and we can trade it accordingly. Consolidation, AM decline, PM rally. Again, initially when the market makes an attempt to rally up into a premium array, we're going to be looking at the indices to diverge bearishly at the highs comparably. And we're going to be holding for, again, ideally around 10:30 to 11 o'clock in the morning New York time. Then anticipating after 11 o'clock some measure of consolidation to retracement higher going into the lunch hour. Then we will be comparing the S&T divergence that should form at the lows comparable across the NASDAQ, Dow, and E-mini futures, and looking for time of day to support the idea of an expansion on the upside. If it's consolidation, we don't expect it to go all the way into the close. In other words, it's going to be an early short-term high that forms that will be later on a decline seen going into the close. So we're not going to be holding for the rest of the day. We're going to be relying on time of day. So generally around 2 o'clock in the afternoon, it creates that comparable high in the PM session. The AM session low is many times a 15 or 60-minute discount PD array. And the afternoon, again, is also a 15 to 60-minute PD array or discount array. The afternoon low could run just the lunch low, or it can run the intraday low formed in the AM session. Again, as a reminder, how you determine which one it's going to be is if the AM session bounces into the lunch off of a higher time frame nested level that's also seen on a 15 or a 60-minute discount array, then we don't expect the intraday low to be taken out in the afternoon session. But if that AM session low is forming above a higher time frame discount array, then we would anticipate a lower run on the intraday low in the PM session, and then the rally or increase in price after that sell stop run has been seen. The afternoon high is going to be seen with a 15 or 60-minute PD array, and we would anticipate not further upside, but a retracement and gravitation back to the equilibrium price point of the day, basically back to the middle. Consolidation, AM rally, PM decline. In the morning, we're going to be comparing the index SMT divergence at the lows comparably against the Dow and NASDAQ with the S&P mini. And we're going to be holding for minimum of 10:30 to 11 o'clock in the morning New York time. At 11 o'clock, we would anticipate some measure of consolidation and or retracement down into the lunch hour. After 1 o'clock is seen in New York, we would anticipate some measure of a rally again, and we would be comparing SMT divergence at the highs comparably across the three averages, and we would be holding for, again, around 2 o'clock minimum, looking for a run into the short-term lows. The AM session high will be a 15 or 60-minute PD array or premium array. The afternoon will be a 15-minute or 60-minute PD array. Now the afternoon can run the lunch hour high for buy stops if the AM session high forms at a higher time frame 4-hour or daily premium array. If the AM session does not form the short-term high going into the lunch at a higher time frame 4-hour or daily premium array, we would anticipate the rally after the New York lunch to run the intraday high up into a 4-hour or daily PD array or premium array, and then decline after that. So it's a very simple measure of what's causing the high to form in the AM session. If it falls short of a premium array that's seen on a 4-hour daily, chances are it's probably going to rally again harder to reach for that level and then make a reversal. The afternoon low, again, reaching into the 2 o'clock hour, is many times going to be the 15-minute to 60-minute discount array. All right, so just as an example, just to show you what it looks like again, I'll give you an example of a consolidation AM rally, PM decline. That's what was seen today at the time of this recording, and I'm going to show you here as an example. Look at the most furthest down or chart on the bottom. Okay, it's the Dow, and we can see going into the AM session of June 2017 on the 23rd, Friday, we can see that the low failed to go lower into the AM session. For the NASDAQ, we can see very easily and obviously that the NASDAQ was able to go lower and the S&P was able to go lower. So the Dow was able to buck that trend, indicating there was strong buyers stepping in, and the S&P rallied as a result. Then we went into the lunch hour, and then immediately after the lunch hour at 12 to 1 o'clock in New York time, that begins our PM trend or afternoon session for the equities or indices. And again, at the bottom, we can see that the Dow, from the high formed in lunch, made a lower high, was unable to rally above it in the PM session, and went lower. In the NASDAQ, in the middle chart, we can see that the NASDAQ made a higher high than that which was seen in the lunch hour. And the S&P was unable to make a higher high that was seen in the lunch hour. And price trades down as a result and back into the equilibrium or middle of the range. Notice in the S&P that during the AM session, that rally traded all the way up into an old premium array. See that old high back here? So blending these ideas, you can see how using the 15 to 60 minute PD array as objectives and targets, and also to frame the context of what makes these intraday swings occur when looking at the S&P. So when we get into the August content, I give you the top-down analysis PDF. It gives you like a flowchart perspective. I'll walk you through the scenarios that leads to these specific projected ranges and how to trade them accordingly in a trading plan format. Until I talk to you again, next week we talk about the stock trading, doing short-term trading and swing trading with stocks on a month-by-month basis. And that will complete the delivery of June 2017's content. And in next month, in July, we'll be looking at mega trades across all the asset classes as well. And until then, I wish you good luck and good trading.